Welcome to our lesson on ledger posting in accounting. This is an essential topic for Class 11 accountancy under both CBSE and NIOS curricula. Let's start by understanding what a ledger is. A ledger is the principal book of accounts. It contains a separate account for each person, asset, expense, income, liability, and so on. Think of it as an organized collection of all accounts that a business maintains. Now, what is posting? Posting is the process of transferring amounts from the journal, which is the book of original entry, or from other subsidiary books, into the respective ledger accounts. It's like organizing all your transactions that were initially recorded chronologically into separate accounts based on their nature. The objectives of posting are threefold. First, to classify and summarize all transactions under individual heads. Second, to determine the balance of each account at the end of a period. And third, to facilitate the preparation of trial balance and final accounts. Before we dive into the actual process of posting, let's recap the golden rules of accounting that guide whether an account is debited or credited. For personal accounts, debit the receiver, credit the giver. For real accounts, debit what comes in, credit what goes out. For nominal accounts, debit all expenses and losses, credit all incomes and gains. Now, let's understand the format of a ledger account. Each ledger account is laid out as what's called a T account, or a two-column format. On the left side, we have the debit side with columns for date, particulars, ledger folio number, and debit amount. And on the right side, we have the credit side with similar columns: date, particulars, ledger folio number, and credit amount. The LF, or ledger folio number, is a cross-reference to the journal page from where the entry is posted. Let's go through the steps involved in posting entries from the journal to the ledger. Step 1. From each journal entry, identify the two accounts involved. Step 2. In the ledger of the first account, which is debited, enter the date, particulars as to, followed by the name of the credited account. Enter the journal page in the LF column and record the debit amount. Step 3. In the ledger of the second account, which is credited, enter the date, particulars as by followed by the name of the debited account. Enter the LF number, and record the credit amount. Step 4. Cross-reference by noting the ledger folio in the journal's narration column. After posting all entries, we need to balance the ledger accounts. Here's how it's done. First, total the debit and credit columns. Second, subtract the smaller total from the larger to find the balance. Third, enter the balance on the side with the smaller total with the narration by balance C/D on the debit side, or to balance C/D on the credit side. Finally, bring down this balance to the opposite side on the next date, as to balance B/D on the debit side, or by balance B/D on the credit side. Let's work through a complete example to see how journal entries are posted to ledger accounts. Suppose we have these journal entries in January. January 5th, purchase goods for cash, 8,000 rupees. January 10th, sold goods for cash, 5,000 rupees. Here's how these would look in the journal. Now, let's post these entries to the respective ledger accounts. First, let's post to the purchases account. Since purchases A/C is debited in the first entry, we write to cash A/C on the debit side. Next, for the cash account, since cash A/C is credited in the first entry, we write by purchases A/C on the credit side. And since cash A/C is debited in the second entry, we write to sales A/C on the debit side. Finally, for the sales account, since sales A/C is credited in the second entry, we write by cash A/C on the credit side. After posting all entries, we balance each account as shown earlier. Before we conclude, here are some important tips for ledger posting. Always post the debit leg first, then the credit leg. Use neat, consistent folio references for easy cross-checking. Practice with varied transactions like credit purchases, credit sales, and expenses to master all account types. Remember that every debit must have a corresponding credit, and vice versa. And that concludes our lesson on ledger posting in accounting. To summarize, we've learned what a ledger is, what posting means, the objectives of posting, the golden rules of accounting, the format of a ledger account, the steps in posting, how to balance ledger accounts, and we've gone through a complete example. Practice is key to mastering this fundamental accounting skill. Thank you for watching.